get started. So, coming into the week, looking at the economic calendar, we can see that tomorrow, being Monday, we have 10 a.m. news being ISM manufacturing PMI. Now, this is one of the higher probability 10 o'clock news. Usually, consumer confidence and JOLTS job openings tends to be a little bit trickier to navigate, and ISM manufacturing PMI generally offers a better run. So, Monday, we can expect something to do. Tuesday, no news. Although there's no news, it's still considered a day to be viable just because it is NFP week. As you guys know, Monday, Tuesday, and Wednesday are the best trading days of the first week of the month, whenever it is non-farm payroll week. And then Wednesday, we have 8:15 ADP non-farm employment change and 10 a.m. ISM services PMI. So we can expect something to do on Wednesday. And if you're a little bit newer or aren't as advanced, then I would recommend just picking these 3 days of the week and then just skipping out on Thursday and Friday because it can be a lot lower probability. Now, Thursday, even though we have 8:30 a.m. news, unemployment claims, it still can be just a little bit trickier just because it is the day before non-farm payroll. And then Friday, we have non-farm payroll. If you're new, definitely skip out. And even if you're a little advanced, I would proceed with caution because non-farm payroll is an account blower, especially if you're caught inside of a trade whenever it releases. And we also have 12:30 p.m. Fed Chair Powell speaks, so that could be a little tricky to navigate this day in total. So just to recap, Monday, Tuesday, Wednesday, those will be the best days of the week. And we can expect the higher low of the week to form on either Thursday or Friday for the second half of the week. And the first half of the week, we could probably expect to see Monday or Tuesday. And now, looking at why I became bearish, the real reason. As you can see, we are looking at the NASDAQ seasonal tendencies. So, seasonal tendencies paired with the things I'm teaching you about true reversals work very, very, very well. Only if it's actually there. Just like pairing things with the Dow, you would also do that for seasonal tendencies. Take seasonal tendencies with a grain of salt. If nothing or no real viable information is being shown, and you just have like one or two things tipping its hand that's low probability, understanding seasonal tendencies can be that thing that confirms low probability characteristics on the higher time frame. So as you can see, looking at February down here, and to look at the actual seasonal tendencies chart for all of the assets, you can go to equityclock.com. But as you can see, February, that second half of February generally has a downtrend. And you can look at previous years, more times than not, February, the second half of the month, will usually end red. So there will be somewhat of a downtrend. And that is exactly what we got last week. So as you can see here, looking at the S&P, the NASDAQ, and the Dow, looking at the daily time frame, we can see that the S&P hit our first target, which we had outlined, which was that January high. The NASDAQ had already breached it, but the Dow made a failure swing on it and then expanded away. So this is a doubled sequential SMT. Whenever you have SMT between the actual months, we're putting quarters aside. This is an SMT between month to month. As long as something is consecutive, it still can be used. So once we had that SMT take place, it wasn't until the Dow actually dropped, well, that second half of the month created that first drop, giving a reaction off of it, that I was like, okay, we're probably going to flip bearish. And that's what we got. So we had a month-to-month SMT. We got a reaction off of it. And then we had that seasonal tendency in play as well. And then that is the real reason that I turn bearish. But you don't want to come into seasonal tendencies just by themselves because you'll get smoked. There has to be reasons within the chart. The reason being shown right now was that month to month SMT. So if you pair TPDs or SMTs with seasonal tendencies, you can see things that usually other people won't see. And now if we look at the low of January, we can see that we formed another sequential SMT with the low of January, making another month to month SMT. Now looking a little bit further after we had that drop, this TPD right here, as you guys know, we had outlined, we wanted to see the Dow retrace into this gap and then drop lower, while the Nasdaq and the S&P left this gap unfilled, which is exactly what we got. Now that you've watched the core content lecture on continuation TPDs, if we take on the S&P from this highest high to this lowest low, as you guys know, these lows were the draw on liquidity, and then this was the highest point of the true reversal from this SMT. So this highest point to this lowest point right here being the draw on liquidity, as you can see, this TPD formed in discount, which is why we wanted to see it act as a continuation TPD. And the assets that, for example, the Dow, the ones that are contrary to the narrative, as you can see, this cracking correlation right here, this open being higher than this close, while on the Nasdaq and the S&P, this open being lower than this close. That is the reason why the Dow kind of got left behind before dropping and eventually returning back within the range. So as you can see, this TPD for the Nasdaq and the S&P closed in discount. And it did as well for the Dow, but not as much in discount, which is why we wanted to see it act as a continuation TPD. And now where we can expect price to draw towards next, since we have this month-to-month SMT right here, we could expect either a retracement or a reversal. So with that information and Friday forming this sequential SMT with that morning session and the PM session, as well as taking Thursday's low, I would like to see higher prices. And on the S&P, that 6,023 and a quarter level was really where my eye draws to, and on the Nasdaq, that 21,453 and a quarter level. These highs are really clean right here, so that is something to keep in mind. And now we can do some Q&A. What are your thoughts on the weekly TPD? If anything, I'd like to see that support price for this. What is your main confirmation for a true reversal? Whenever you have a higher time frame TPD and a lower time frame SMT, being a sequential cycle SMT. For Monday, are you going to wait for after news to drop, or are you going to wait for news? If something tips its hand before news, you could see news act as distribution. Would you say the safest setups always just wait till 9:30 stock open generally? Yes. More times than not, the safest setups will be at 9:30. We have bearish monthly cycle with the Dow, turtle souping that weekly fair value gap. Since this is monthly cycle in Q1 of the week, could we see this as engineered liquidity for price to later magneto to? We'll see. Does consecutive SMT require TPD for confirmation? No. If you have like a daily time frame TPD and then you see a weekly cycle sequential SMT, because of that daily time frame TPD, then it doesn't necessarily need something confirming it on the hourly time frame. Instead of using the mini charts, can you also use the micro charts? Yes. And if you do trade the micro, always look at the mini as well. And do your take profits looking at both. Because sometimes, just because the micro has a little bit more volatility, you'll see a very, very tiny SMT or Kraken correlation that forms that will prevent your take profit from getting hit. So like your take profit will be right at the tick, and on the mini it hits it, but on the micro it doesn't, or vice versa. So whenever you do look at the mini and the micro, or if you do trade the micro, always observe the mini and the micro whenever you're taking profits to prevent, taking an unnecessary break even. If we had NQ and the S&P sequential SMT, but Dow is out of sync, but gives us a TPD, do we still wait for another lower time frame confirmation too? Yes. So like best case scenario is that we see some form of Kraken correlation in here to propel price higher. And this drop that's happening right now, this shouldn't scare anybody. Said you would explain more properly why we were going down now. Why was that equal to or greater than if it played out? If you had hesitated, you said next time, there we are. So month to month is greater, or you just expected a retracement. Month to month is a high factor in regards to weighted probabilities. Can you talk about trade management? So let's say this right here. So understanding trade management. So let's say you get into a trade and then you're looking for a 1 to 3 risk to reward. So you have your target and you have your entry point. Your entry and your target. For some of you, it will be a 1 to 2. For others, it will be a 1 to 3. And for the small percentage of people that are crazy, y'all will hold for the entire weekly range. But wherever your target is, a good rule of thumb is everything that's in between. Generally, your target can be either a low or not a low. In this example, it'd be a high. An old high or old low, or a gap, a higher time frame gap. Now, in between there, in between your entry to your target, on the left side of the chart, you can look for small fluctuations where you can look to take partials. Now, as a rule of thumb, always take a partial only whenever it's above the 50% from your target to your entry. Any partial below here, in my opinion, just isn't worth it, and you're going to skew your risk to reward and you're going to skew your results of consistency. Because if you always take a partial right here, and then it comes back and rolls against you, comes back, rolls against you, your wins aren't going to exceed your losses. But as soon as you do take a partial that's above the midpoint from your target to your entry, roll your stop to break even. That's proper trade management right there. As soon as you enter, you already know, okay, here I'm taking a partial and then I'm rolling my stop to break even. Here I'm taking a partial and then I'll roll my stop even deeper into profits. And then once it hits there, I'm fully out. But there's a proper way to take partials to where it doesn't, like I said, skew your results and allow your losses to be greater than your wins. Whenever you do take a partial, let's say that first partial, only take off like 25 to 30% of the position if you have two partials. If you have another partial, then take off another 25%. You don't want to have one partial that's right above that 50% or right at that 50% from your target to your entry and then take half the position off, because that would be the equivalent to if you were to just close the entire position where that partial was at. Make sense? So that's proper trade management right there. Rules for trade management: only risk a certain percent and only take so many trades per day. But rules for trade management is going to be solely dependent on how much risk you can tolerate. Friday PM session, that SMT was wick to wick. Do we consider this low probability? If it's confirmed, then it can be still used and considered high probability. Only when it's confirmed. When will you talk about stop losses? We'll get a little bit deeper into that once we get deeper into reversion levels. Because once you understand reversion levels, like truly, what truly goes on, it's entering becomes the easy part. Can we scale the position? If you choose to. Like I said, it's just completely dependent on how much risk you can tolerate. When do we really trust NY continuation? Sometimes I see Asia London session sequential SMT, but still New York forms a daily cycle sequential SMT whenever it forms within a gap, specifically a 4-hour fair value gap. So let's say the previous day expanded and left a 4-hour fair value gap. If the Asia and London session create a sequential SMT inside of there, that's usually whenever New York has a continuation. The current hourly breaker and fair value gap universal model created off the higher time frame SMT on the lows could create a bullish reaction. What's your thoughts on this high probability zone? I believe you're talking about this. Is this what you're talking about? Preferably, in this scenario, I wouldn't want to see the S&P draw down into there. If it were to, I would like to see this breaker completely untapped. The only one that's really is permitted to is the Dow. Not the Dow, forgive me. The NASDAQ. Just based off strength and weakness, I wouldn't want to see the S&P go all the way back into here and then run higher. I would like to see more so this be the one that stays. At what point did you know you were ready for minis and micros? Minis and micros mean absolutely nothing. It's solely dependent from your entry to your stop loss and how much you're willing to risk. If your stop loss is 200 points, more times than not, you're going to be on the micro. If your stop loss is 2 points, more times than not, you're going to be on the mini. So it's completely dependent on how much you're risking on a trade. And yes, like that person is saying right there, with micros, you can take partials along the way. Instead of trading one mini, you can use 10 micros and then take partials along the way. Scale out of a position. What you have marked out as premium and discount previous week or all of 2025 so far? Are you talking about this, or it was this right here? So the logic behind this was, number one, this high right here. After price had already dropped, this was caused by sequential SMT. This low right here was another sequential SMT. So from the highest point of the range to the lowest point of the range, we don't really care about all the fluctuations in between. This is the highest point of the range caused by sequential SMT. This is the lowest point of the range caused by sequential SMT. That's where the premium and discount is really derived from whenever it comes to continuation TPDs. Not trading related, but what's your goal in 5 years and what's your dream car? That's tough to think about. Main goal? I don't even, I can't even comprehend it. Just take it 1 week at a time. How can we backtest until you release more on weighted probabilities? Because there's moves I can't really foresee while backtesting. You would just look at old sequential SMTs that got completely blown through and then look on what caused price to reverse and blow through the SMTs, changing the direction, or TPDs. Is there a reason why I suck at backtesting but not trading in the live markets? You're more of a action person. And backtesting, while backtesting is useful, it's only useful for a certain amount of time. There becomes a point where backtesting doesn't really offer that much to you. Once you have everything set in order and you have your data, you have all that good stuff, then the only thing that really is important is forward testing and being able to anticipate things and being able to see things. That's where a majority of your learning will come from, and usually that'll come from year 2. When will we consider bonds again? In the near future, but they're really not that important. Have you noticed that once a TPD forms, more likely than not, it will want to go to the one that happened before? like price moving from TPD to TPD? How do you feel about developing TPD? Like all the things that go behind it and seeing it be so successful? It's crazy. There's so much new stuff that I brought to the table for you guys. And then you still have people say that some people still say this is just a stolen concept. But let the people on the outside, let them think what they want to think. But it's crazy seeing it over and over and over and over again. Yeah, generally price will move from TPD to TPD whenever the time is right. But I think we're going to go ahead and wrap this up. So hopefully you guys found this one insightful. I will speak with you all again in the Tuesday pre-recorded lecture, and we'll host the second live stream of the week on Wednesday. So with that being said, good luck and good trading.